Hey, what's up, guys? It's Qui-Gon Jinn here. I'm just recording a short video and doing a quick update on some price action that has happened. This is my Twitter handle, or on X, if you want to follow me there, at Qui-Gon Jinn. So, anyways, I don't have too much to say about the price action that has happened recently, um, except for the fact that you are in a range. Bitcoin is stuck in a range, and it's obviously been sideways bound, stuck in this range here between sort of the levels that I mentioned before, around this 57,500 and 61,350, stuck in that area. And I mean, you've got some trouble up ahead. Obviously, you're still below the bull market support bands. You've still got this death cross on the daily that is overhead. You've also got this monthly support zone that we have now lost, or so far are losing. This monthly these monthly candles, this monthly support zone. That's what we're struggling with right now, guys. So I mean, it is a good sign to see that Bitcoin closed every candle above 58.5. Where we have this sort of magic box drawn that I was talking about. I said if there's consolidation inside this box or above this box, it is technically a pretty good sign, and that we're gaining ground. So it is good to see that you've closed every daily candle body since August 8th, inside or above this box. Closed everybody. We closed the daily yesterday. We closed the daily actually above 60K. So now the price is currently above 60K, but still struggling with that 61,350 area. Now, if we go down, I had mentioned that, or if we go down in the 4-hour time frame, I had mentioned that getting these sort of lower high rejections didn't look too good. Now we might reject from 60K and then come down further. If we lose 57, expect to come down to 51.4. But I also said that if you held the 50 SMA on the 4-hour, that it is more or less a good sign. And we did do that. You're holding this consolidation in this box. Now you're back above 60K. You're just struggling with this level. But that still is a good sign that this 50 SMA on the 4-hour is curling up, and you are holding above it and putting in some higher lows there. So that 50 SMA also coincidentally is the 200 SMA on the 4-hour. And if you remember what I was saying in one of my previous videos, is that this golden cross here on the 1-hour that is the first bullish signal. And whereas the 50 SMA on the 4-hour is the same as the 200 SMA on the 1-hour, it kind of also gives those two level a bit of confluence with each other. But that's irrelevant. What I wanted to point out was that if you remember in my last video, I was saying that after a golden cross, a lot of times you fall down into it. And I was thinking maybe that could have been all it needed, but when it rejected with the lower high here, I said, all right, well, maybe it will hold up at the 200 SMA. Because after a golden cross, you do usually see a bit of a pullback into the golden cross, or at least somewhere around that price level. I said as long as if you have a golden cross and the price falls back below the 50 SMA, as long as it's held by the 200 SMA, you're still in pretty good shape. So yeah, we really still are more or less in pretty good shape. I like that it held this structure here, and I like that it held the 200 SMA on the 4-hour. If we can hold, at or around 60K and break through this 61,350, that's when we can really start cooking to the upside. But you do still have a lot of stuff ahead, a lot of stuff above us, including, support and resistance zones. You've got anchored VWAP up ahead. You've got the bull market support band, which you more or less have been rejecting from every time you hit it so far, since we've been below it. Since we've gotten below it, pretty much every time you've hit it, you rejected from it. So that's pretty much where Bitcoin stands now. you're sort of trading in this sideways range. I don't really know what the hell this mess was here, but that's crazy messy. Um, and I think that a lot of it is just due to people sort of being over leveraged. If you look at this liquidation chart, you can kind of see why we're just going sideways in a tight little range here, because there's the price goes up, takes out shorts, people go long, people get confident, they go long, and then the longs get flushed out. And there's too many longs, or the longs are over leveraged, or they, their position size is too big, or whatever. After you flush out the longs, they go, people start to enter short. So people entered short on the way down. They flush up to take those guys out, to flush those guys out. Then they take out more longs. The price pushes up, more longs get entered. They push the price up to liquidate some shorts, and then the process just continues. So they're more or less just fucking playing ping pong with leverage traders right now inside of this range. And now look, you could push all the way up to like 63,500, and they could flush out the short liquidity, and then still drop all the way back down to 56,000. So you could go all the way up to 63.5 and still flush all the way back down to 56K, and you'd still be trading in this same tight little range that you've been in for like quite a few days now. Almost a week, realistically. So that's what's happening. The market makers playing ping pong with people's money, and if people would just, have use modest or reasonable amount of leverage, or have a reasonable position size, maybe these sort of flush outs wouldn't be happening in such a tight range. But in any case, it looks as though it's been a nightmare to try to trade this range. I've actually been sitting out this week, and I haven't been trading at all on leverage for a while. And part of the reason for that is because we've got some economic data coming up. And I think that these are, whether it's the lack of volatility or, it's volatile in a tight range, but lack of breaking certain levels. I think a lot of it is hinging on what's going on with the economic data, because we've got a big week of data. And the star of the show basically is, as it always is going to be core CPI and CPI data, which is coming out tomorrow, Wednesday, August 14th, at 8:30 a.m. Eastern. So the CPI, I believe that their last release for year over year was 3%. Or their last forecast was 3%, and also the previous from the last data release was also 3%. So there was no change. Last time they reported, there was no change from 3%. Now this time, look, they're forecasting for it to be no change in the CPI year over year. So if year over year they're expecting it to be no change, and it comes in line with what they're forecasting, well, then it's probably more or less going to be a nothing burger, and everyone was sort of waiting in anticipation for nothing. Or I guess you could see a lower number. If it comes in lower than expected, that's going to be bullish, because one, it means inflation is continuing to go down. Two, it means they might feel more comfortable that they're doing well on their path to get to 2% inflation. That might make them feel more comfortable about maybe cutting rates earlier or in September, like they sort of theorized that they're going to, or that people have theorized that the Fed is going to cut in September. But it's like a puzzle piece, guys, right? So you got to have all the right pieces to the puzzle, and if you put the wrong piece in the wrong spot, the puzzle's not going to look right. And they've been being pressured to sort of cut interest rates but that would cause some other things to happen, within the economy, that it might not end up being the best idea to cut interest rates that soon or too soon. They don't want to cut too soon, but also if they wait too long, they don't want to wait too long because bad things can happen if they do either or. So I really think that they're just trying to get together a good game plan and get a good idea of what's going on, because the economic puzzle, like, it has a lot of pieces to it, and you can't just go putting the wrong piece in the wrong spot, because if you do, the puzzle's not going to look right. It's going to be the wrong picture. You're going to have to take the whole puzzle apart again, and you're going to have to restart the whole fucking puzzle over again, and you're going to have to start over from scratch. And puzzles take a long time to build, so you got to take your time, build your puzzle properly the first time. And I think that's what the Federal Reserve and Jerome Powell are trying to do. They're just trying to make a good, nice looking puzzle without any pieces being out of place. And that sort of thing takes time. So anyway, if it comes in lower than expected, that could be pretty bullish. If it comes in higher than expected, that's going to be bad. I wouldn't expect it to, but if it does come in higher for some reason, then it means that what they're doing either isn't working or it stopped working somewhere along the line, or there was a whole nother wrench thrown into the plan that was not anticipated. And for some reason, inflation is getting worse again, and they will then have to readjust their game plan as far as what they're going to do to tackle that. If we do see another uptick in inflation, which would, probably call for a longer pause or maybe even a rate hike. But that's not worth worrying about until it actually happens, or until it actually starts coming out hotter. For right now, they think it's going to be right in line with 3%. So they're thinking that's going to be no change. So it could end up actually being a nothing burger, and nothing happens, and everyone waited in it anxiously in anticipation for nothing. Or it could come, you could get surprised and it could come out lower. But we'll see tomorrow morning at 8:30 a.m. Make sure you keep an eye on those numbers. There's also some other data coming out this week, so keep up to date with that. But in any case, I think that is, a big reason why Bitcoin has more or less just been going sideways. But ultimately, one of either the top or bottom of this range has to give, and we will have better answers at that point. Again, keep an eye on if we do fall, this 55.8 and then 54.1 as some areas that would, the next sort of areas that would need to hold. But assuming we stay above this 200 SMA, which now is at 58.8, then we should be good, and we can probably charge and try to break past this 61,350. But do keep in mind that there is quite a lot of resistance above, being the bull market support bands and the 50 and 200 SMA on the daily. Now, if I do just check out the oscillators real quick, you can see that you do still have some, stochastic still has some momentum on the daily. The MACD also does have its bullish cross. The bullish cross actually did occur on the MACD, and you now have a green histogram bar. So momentum on stochastic still. You haven't lost momentum. You haven't had a bearish cross yet, and you do have a bullish cross on the MACD with a green histogram bar. And if we look over at others market cap, you can see that you kind of have a bit of a similar situation going on, where you do still have momentum in the stochastic. You had a bullish MACD cross on the daily. Now you have two green histogram bars that are getting larger. So is technically a good sign that others market cap is picking up steam. It's also a good sign that it's above 180 billion. But you do also have, resistance coming in at this level. Like this level is proving to be, is proving to work pretty well as resistance. You also have this 0.5 fib level here. If you take this from this recent swing high up at, 250 billion, somewhere around there, and you bring it down to the swing low at 150 billion, you've got your 0.5 sitting right there at 200 billion, almost exactly 200 billion, which is funny. But that's where you keep wicking off of with every single daily candle. But you have also been closing above 180 billion for about a week now. You've been closing every daily candle above it. It also looks like you might be trying to take back this trend line that we dropped from, which doesn't have too much relevance, but it would still be yet another good sign to be closing back above that. I think ultimately, if you can get past this 0.5 zone at 200 billion, you can probably try to push up to this level, 212. If you come back and flip that, then we're talking about potentially touching the top of this falling wedge formation, which is a bullish pattern, but you would be probably likely meeting resistance at this, descending trend line here. So there's that, and also you have your 21-week EMA, the bull market support band or bear market resistance band is acting more like right now. So if you do end up pushing up with the alts, and you get back above 200 billion in others market cap, then the altcoins could really start showing some more strength if you get back above 20 or 200 billion. But you have to at least close a daily candle up there, which we have above there. You have to close a daily body above there, which we have not done yet. Even if you do, 216 billion might act as some resistance, being the 50-day SMA. And you also still have the bull market support band, which will probably be coming right in line with this 786 level, as well as this angular resistance, this downward sloping trend line, this angular resistance, which is the falling wedge, the top of the falling wedge, which is a bullish pattern, which if we do go up there and we reject from here, it's not going to be the end of the world if we were to come back down one more time by mid-September, after getting the rate cuts resolved. Maybe we start to gain ground again, have a chance to accumulate, and this time we actually break out of the falling wedge and you get a nice big bullish breakout, and then that's when we get our altcoin season run, potentially starting. I mean, if we get the Halloween effect, if we break out sort of towards Halloween and you start reaching towards newer newer cycle highs, we get up to new cycle highs, then I have no doubt in my mind that the beginning of next year should start a pretty good altcoin season. But first things first, like I said, closing a daily body above that 200 billion, that would be your first good sign. If you don't, then we might have to go back down into this green box for a little while longer before we can start to gain our footing and come back up. So that's what I've got for others market cap. And again, like I said, the oscillators look pretty similar to how Bitcoin is looking at the moment. So that's what I got for altcoins. Overall, you want to get above, others has to be above 200 billion in order for altcoins to be in a strong position and have a bullish stance. Until then, I'm just trying to accumulate and waiting to see if more lower prices come in again, and if I can take better advantage of those dips. But again, still sort of on the macro bullish side, I'm willing to hold spot positions for the long term, especially with altcoins and how low they've been, and really how much pressure is just being built up with them. So I just want to close it out by talking about the US 500 real quick. And what's cool about the US 500 is it looks like we broke that back past that trend line. US 500 has actually been doing pretty well. I remember I was saying back here that this was the point of like max fear, and these maximum, when everyone's afraid, that's the best time to be buying. Well, I mean, you're up nearly 7% off of that. That's huge percentage in 9 days. I mean, a little more than a week, but I mean, you get the picture. A few days, like a lot can change. You're up 9%, or you're up almost 7% in the S&P 500. That's pretty huge. Pretty big moves. Pretty volatile moves, especially following such a dramatic drop like that, which that drop in and of itself was like 8.5%, which is pretty crazy over, really only 3 days, 3 trading days. So nuts. Like, things have been getting wild, and this is this bull market type volatility that I was mentioning. Things drop really fast. They get really volatile. Things drop really fast, and then they recover just as fast, if not faster. So, it's a good thing. It's a good sign, or a bullish sign, that we closed above this 0.5 zone, because I have this fib drawn from the all-time high. From this current all-time high down to where we dropped, and just to extend that out again, it's sitting right about 53.80. So closing a daily above 53.80, that is a good sign. You also got back above this resistance at 5400. So 5400 was a crucial level to take back if the bulls wanted to take control back of this chart. So I think a lot of stocks ended up having pretty good comeback too. So it's really great. I mean, for the S&P 500, it kind of moves really weird. It's heavily dependent on how well the stocks within it are performing. But just looking at the chart and going down to the 1 hour, I mean, you can kind of see the way that things developed, where at first, you had a lot of resistance here that ended up becoming a support. You flipped it, support here, that bull market support band, that 20-week SMA, like I had mentioned, you flipped that as support. You broke through this trend line. You came back, you retested it, and then you proceeded to put in higher lows above the 50 SMA on the 1 hour before breaking through 5400. So those are all bullish signs. And especially after you had this golden cross here between the 50 and 200 on the 1 hour, you kind of you fell down into the golden cross, and then you pushed back up, held the 50 SMA, and then continued to push past 5400. So some pretty bullish signs on the S&P as far as that goes. Looks like it's well on its way towards this higher zone that I have marked out here, being, 5,500. It's really kind of on its way through there. But the reason why I have the box drawn out here is because between 5,500 and 5,450, so 5,450 to 5,500. This is really gonna be kind of the box that you want to get past, because if we can flip 5,400 area, you can start charging up to this spot here. Closing above the 618 would be super bullish. You could then go and try to retake this zone before we pick up steam and try to attempt a new all-time high. Or, I suppose, if you come up here and you just reject from this level, you could theoretically just reject from that level, lose 53.80, 5,400 and 53.80 again, and then you just come back down to test some similar prices again before going up, again, and then just doing some sideways shit for like the rest of the year. That could absolutely happen. We could just go sideways for the rest of the year, and the S&P is just trying to, or the whole market in general is just trying to regain its footing. You could absolutely do that as well. But for now, again, it is a good sign that you're above the 0.5. You're above this. You flip this resistance into support, and you've now been doing that repeatedly. Flipped resistance into support, broken angular, retested it. Now you're breaking this. You broke this resistance here. So hopefully we can flip that into support, and the S&P 500 will stay in a stronger stance, and hopefully, we can get at least up to that 5,500 area. If we do that, we'll see where things go, because it might actually start to pick up traction pretty quickly if that happens. So definitely keep an eye on that. And that's really pretty much all I've got for you guys tonight. I had a few other things that I was going to take a look at, but I can just do a deeper dive with them in another video. But yeah, so anyway, just wanted to give you guys that update. I know it's a lot of sideways in Bitcoin and altcoins right now. There's not too much price action to even speak of, but I mean, the price is more or less squeezing between 2 points, and eventually one side is going to give, and we are getting closer to figuring out which side that is going to be. So just hang in there, wait for the data that's coming out. Again, CPI data tomorrow, 8:30 a.m. And that should give us a better idea of what's going on. But the S&P 500 is looking like it's regaining its footing pretty well, and has been picking up steam and giving some more bullish signals and sentiment. This looks like it could be someone trying to front run a trade, expecting better data, better CPI data, or whatever, or they just are anticipating no change and they're just pricing that into the market. There could be any number of things, but in any case, for the moment, S&P is looking pretty good. Hopefully Bitcoin follows suit, and hopefully, or if you're bullish on Bitcoin. If you're bearish, then obviously you would hope that it would, just reject and then start tanking, in which case I would get a cheaper price anyway. But no use talking about it until one or the other happens. And I think that either one could happen pretty soon. So definitely keep an eye on it. Anyway, guys, there's your update. I hope it was helpful in some way. If you do like the comment, if you're here for the first time and you do like the content, make sure you hit the like and subscribe button. Subscribe to the channel. Hit the bell for notifications whenever I upload. I try to upload as much as possible every day if I can. Some days I'm just not able to, of course, though. But I try to keep up to date as much as I can, and trying to provide some good quality content for you guys. And yes, the altcoin video is coming. I will be releasing that video on altcoins. I'll be doing some analysis on some altcoins that were requested of me. I just wasn't able to get it done today, so hang tight for that video, and that should be coming soon. Like I said, if you like the content, hit like and subscribe, and hopefully I will see you again in the next video. Alright, thanks guys. Have a good night.